We have two things to discuss here in this video. First and foremost, the fact that AMC just repurchased $72.5 million of their debt at a 31% discount. This is really going to help keep AMC stock bullish, in my personal opinion. This article did just come out about 40 minutes ago at 1:01 p.m. here today on July 21st. You also do have S3 that put together a list of the top 25 stocks most likely to benefit from a short squeeze, and AMC and GameStop are both on those lists. In addition to that, we will talk about the Ortex data and everything else that is happening today with AMC and the broad markets. We are going to keep this video short, sweet, straight to the point. So if you guys like the shorter videos, hit that like button. If you don't, comment down below why you like the longer videos. Do you like to get into the currencies and how that affects? Just dive into more not Econ 101 kind of things, more advanced macro data and all the other stuff that we like to go over. So let's get straight into this video. If you guys want to come trade with me live in real time as well, link down below in the description. We have been killing it, and we do have some earnings trades that might be pretty dang good in my personal opinion. So first and foremost, this article says squeezable AMC GameStop stocks break out to multi-month highs. Both meme stocks made S3's list of 25 stocks most likely to benefit from a short squeeze. Shares of both AMC Entertainment and GameStop Corp surged to multi-month highs Wednesday as they extended breakouts above previous chart resistance levels. The rallies came after Ira Duansky, managing director of predictive analysts at S3 Partners, said in a recent note to clients that the two meme stocks made his list of the 25 most squeezable U.S. stocks, and those are most susceptible to a short covering rally. And it just goes into a little bit more of the technicals here. And the fact that we are now above and holding above the levels that we were at in late May, early May, late April, after we had got that mid-March rally, obviously the one that put us close to about $35 per share. So it looks like people are starting to predict another short covering rally in the same sense of what happened during that March rally. So I think that is a very bullish thing. AMC was actually number 14 on this list, if I do recall, and GameStop was 24th on this list. And they go on to say, just acknowledging that AMC has soared 37% over the past month. GameStop shares have hiked 16.5%, while the NASDAQ has gained 7.8%. So AMC well outperforming the markets, but even GameStop over double a more positive return, right? Getting words mixed up there, but over double what the S&P 500 has done. Now he says, quote, the chances of getting a tap on the shoulder from a chief risk officer to cut losses and get out of a trade is higher for these stocks, Dowinski wrote. Quote, the higher chance that short sellers may be forced to buy to cover will only push stock prices even higher and making the squeeze even tighter for the shorts still in the stock. This is something that we have talked about for a while now. When you get to a breakout like event or a pop-off event in the video that I put out yesterday, those first initial shorts that get out, those are going to be the ones, usually the smaller guys that can not really afford to stay in their positions. And then as the stock really starts to get juice and starts to go up, it turns into more of a margin call kind of situation, or even potentially bankruptcies, depending on what kind of concentration some of those hedge funds have in their short positions. There's a big difference between a hedge fund that has 5% of their assets in an AMC short position and a hedge fund that has 0.5% or 0.25% of their assets in that AMC short position. So essentially acknowledging the same thing that I've been saying for a while now. Now on top of that, they're talking about yesterday's 7% move. This was actually because AMC repurchased $72.5 million of debt at a 31% discount. Now they go on to say that they still have about $5.5 billion worth of debt, and that it's going to turn out to be a dicey situation if they don't become profitable shortly. And obviously they're probably going to turn a profit in this next quarter, in this quarter that they are reporting for right now for Q2, as more movies have actually went to theaters. So that is a fundamental good thing. And then you get more acknowledgement, S3 basically confirming a short squeeze without coming out and saying that. They track the data, they track the analytics on these kind of things, and I think it's no surprise that AMC has really been a standout in the quote-unquote meme stock realm, as we have went from $9.70 per share on the low, and that was as of May 12th, now sitting at $17.48 per share, hitting a high of $18.37 per share earlier in the day today, and on a very bullish upward trajectory. It really doesn't take a genius to see what kind of bullish trajectory we are on, and the fact that we have been breaking out of resistance levels and holding support at those previous resistance levels over the past, call it 50-day moving average, the $15 price, as well as the 100-day moving average. Well, now we're going to start approaching the 200-day moving average at $22.23 per share. This is textbook. This is a textbook rally. And once you get a reason to see the stock go up in a dramatic way, well, that's when you're going to feel a lot of pressure, or when the hedge funds, I should say, will feel a lot of pressure in their AMC short positions and really start to feel the burn. And that's potentially when you could see an even larger event. So both of those things, very, very bullish. As far as AMC on the day, it's literally flat. I mean, you're in this solid trend line, a little bit of consolidation, give or take, you know, over this period, especially today, a little bit of that consolidation, but the fact that you're not dropping after we have rallied 37% in the last month is definitely a good thing. And people that have been buying the dip down in the $10, $12 range, definitely you are feeling some gains in your portfolio. As far as the RSI, that is at 69.32, so approaching that overbought level. But I think today, the fact that we are not up again, 5 to 10%, it's really going to hold off and cool down the RSI. And that should be a good thing. Now, the MACD is bullish, but still, I mean, we have a lot more room to go before you could start to say, hey, we've seen shorts covering, we've seen a FOMO rally, we've seen a gamma squeeze, things might need to chill out a little bit. We are not there as far as the MACD is concerned. The volume for the day currently sitting at about 28 million shares, so nothing too crazy. And that's something that I like to point out in the last video as well as in this video, that you've seen these rallies off of low volume. Yesterday, you went up 7% off of 47.5 million shares that traded hands. So it has not been a big volume day. And why is that important? Well, because when we get a big volume day, when we see a lot of volume, that is when the price of AMC will probably go up 30, 40, 50% in a single day. And I am still in line with my, end of summer, fall prediction to ultimately see the MOS. And really, given where hedge funds portfolios are now, I think you're really closer than not comparatively. If you look back to the last rallies that we have seen, hedge funds portfolios were in a lot better shape. So there you guys have all that information. As far as the Ortex data, you are looking at options for the day of 12 orders, almost $1 million worth, positive order value of 64%. So positive, nothing that is really driving us up or down. You're not seeing a lot of those large orders in one direction or the other, and that is what has really been moving AMC stock by and large. When you get those big downside moves or big upside moves, you can usually correlate them to large options, whether calls or puts, that the market makers have to go out and hedge for. Now, the estimated short interest of free float currently is 18.63%. Short interest, the dollar amount, is 1.68 billion. Free float out on loan 27.17%. Shares out on loan 140.06 million. Days to cover 3.36. Cost to borrow of 10.23. 100% share utilization. If we look at the cost to borrow max, that's at 11.38%. Cost to borrow average at 10.33%. Cost to borrow minimum at 9.56%. So all in all, when you boil this down, I do think we're in for a pop-off event, and I do think we're setting up for a very large move. Usually when you just combust like this, we'll just call it that, we're combusting up back here in March, and then you finally get the explosion and you get a 45% positive day that jumps the stock $10. Next day, same thing, another big jump, but then we got pushed back push back down. So that's ultimately what's going to happen in my personal opinion. You have not seen FOMO, you have not seen gamma, you have not seen shorts covering. This is an accumulation phase, whereas just people are acquiring positions. You can see that with Ray Dalio's fund, with the Swiss bank that continues to buy more shares of AMC, and seeing net inflows to AMC every single month is starting to be reflected in the share price of AMC, not necessarily external factors that we just mentioned that will give us that pop off event. So that is going to be all for this video. Hit that like button and subscribe to the channel if you guys want to come trade with me live in real time. Link down below in the description. Thank you guys for tuning in. I will see you in the next one.